three things this morning in your notebook. Number one is Japan. Number two is the euro versus the dollar. And number three is the 10-year bond yield here in the U.S., which will definitely have some constipation regarding great economic data. Never mind good. Number one, Japan. Japan does not like what? It doesn't like the yen going up. The yen went up for 3 consecutive days, and Japan is down 3.7% in 2 of those 3 days. So, of course, this correlation is very high. You need to worry about that. Obviously, if you're long Japan, we currently are not long Japan, and we don't plan on being long Japan, but we are actually long the yen fortuitously for a trade, even though it actually hasn't worked. So, I mean, I'd say that it's down a little bit against us, but I might sell that today just because the 3-day bounce is what it is. So that would be point number one. Point number two would be the euro. It's really hard for the Europeans to keep the euro down, and I mean the Eurocrats, not the economic gravity in Europe or the Europeans themselves, because Europeans themselves understand the matter quite easily, which is, of course, as the euro strengthens and as the pound strengthens, the purchasing power of the people strengthens. And that, of course, is why you see fantastic economic growth data coming out of places like the UK. UK car registrations were up 7% year over year in the month of November. Look at that. Imagine that. You have more money in your pocket, more purchasing power, and you buy a car. These are very simple but non-trivial matters to Keynesians, of course. But again, look at the euro. The euro is strong, the dollar is weak because, of course, U.S. policy on the margin is more dovish than even European policy. And then finally, point number three, which is the 10-year bond yield. This is going to provide the constipation that is good. What is great economic data? What is tapering? What is a tapering expectation? What is the expectation of the Fed getting out of the way? It's good. It's really good, and it actually went at one point to great. But unfortunately, we don't have a policy in this country where they are going to be data dependent. So this is where this gets really tough today, because as great economic data is reported on a lag, you are going to look forward as a tapering expectation gets unwound, because the Fed is going to engage in open market storytelling to tell you that a 3.6% growth number is not enough to taper. I mean, it's a great disaster in American history, and I don't think that history will side quite kindly or well with the Keynesians on this one. So again, we'll have to leave that for further days down the line. And those are your top 3 things.